Hi, my name is Colleen Coleman. I'm a licensed broker in California, and we're going to talk about a short refinance today. Most people have heard of short sales, but I find very few people have actually heard of or know what a short refinance is. A short refi is similar to a short sale in a couple ways, but very, very different in some extremely important ways. In both cases, the bank agrees to forgive a portion of your loan balance and you get a principal reduction. With a short refi, you actually get to keep your home. A short sale, you sell your home to another buyer. With a short refi, your principal balance is reduced and therefore your payments are much more affordable. You get the opportunity in this particular program to refinance the loan into a more affordable FHA-backed loan. So you keep your house, the payments get smaller, the principal gets reduced. So it's a win-win-win for everyone. Here are the eligibility criteria for a short refi. You must be current in your monthly payments. You cannot have any late payments within the last 12 months. This is crucial. You're not a candidate if you've had any late payments. Only applies to the first mortgage, not the second or third. Since you are applying for a new loan, you have to meet the credit guidelines and other guidelines that are set by your new lender. And the loan to be short refied cannot exceed the FHA maximum limit for the area. That varies from city to city, state to state. For instance, in Los Angeles County, it's $729,750. That's the maximum amount of the loan that you can short refi. Participation by your lender is voluntary. This is really key. Your bank does not have to participate. You have to get their permission. They have to voluntarily agree to participate. They have to forgive at least 10% of the loan balance. So if your balance is $400,000, they have to forgive at least $40,000. If it's $300,000, they have to forgive at least $30,000, and so on. You have to provide an explanation regarding your hardship that's existing or that will happen in the foreseeable future. And again, I want to emphasize this, you will be applying for a new loan, so you have to meet qualifications for a new loan with respect to credit scores, your current income, your current savings, and your current debt. All those things will be taken into account. In this particular program, if the loan involved is already FHA, you cannot use this program to participate. And it is only for homeowners. It's only for owner-occupied property. If you have a second home or an investment property, this program does not apply. Costs, you have to pay for an appraisal up front before any guarantee is given and before the lender will consider a short refi. That's so the lender can get an idea of what value the property is worth right now. And since the new loan will be backed by the FHA, there will be mortgage insurance premium, which is MIP, equivalent to PMI with conventional loans. This will be an actual refinance, so there will be typical fees associated with the refinance, title, escrow fees, there may be points, etc. And the broker you use will point all those fees out to you. Will your credit be affected? Yes, most likely it will be affected somewhat negatively. It really depends on how the bank reports the forgiveness of debt to the credit agencies. Most will report it as, payment for less than amount owed, but gee, that's a small price to pay for getting lower payments and keeping your home. If you have a second mortgage, for now this FHA-backed program only involves the first mortgage. It's important to know that the combined debt on the first and the second loans cannot be greater than 115% of the fair market value of the property. For instance, let's say the appraisal came back at $100,000 fair market value. The first and the second loan together cannot be more than $115,000. And if it's more than that, then either the second has to be talked into reducing the principal balance or the first may have to be talked into reducing it further. The benefits of the short refi are huge. You get to keep your home, your principal gets reduced, and your payments are much more affordable and, of course, lower. And did you know you can only do a short refi on a loan that's original purchase money? If you've already refinanced the loan that you used to purchase the home, you cannot do a short refi on that. Most banks do short sales. Not very many banks do short refinances. Check with your lender, call them, see if they will consider a short refi, or call me. I'd be happy to help you. Tax consequences, there will be forgiveness of debt, so the lender may issue you a 1099-C, and you might be responsible for income taxes on the amount forgiven at the end of the year. Check with your tax expert to see exactly what applies to your particular situation. I'm not a tax or a real estate attorney. Thank you so much for listening. Would love to help you with any of your real estate needs. And please give me a call or visit my website. And I hope this helps. And thank you so much. Bye.